What's going on, guys? This is Trillionaire Mac back with another video. So in this video we are going to go over a trade breakdown of a trade on GBPUSD that I took last week along with all of my mentorship students. Alright, so all of my mentorship students received this trade. It was an amazing trade. We go over all of my trades and things like that on our Monday night webinars and also on group sessions throughout the week. Alright, so on this trade right here, let me start from the very beginning what I was thinking. So up here within this area, we can see a Wyckoff distribution schematic unfolding. I really don't put too much emphasis on the Wyckoff theory, but when I do see it, okay, it is something that I do pay attention to. If I see the market consolidating, then I look for my Wyckoff distribution schematic. But what I really care about are these imbalances and these liquidity voids that we can see take place on the H4 time frame, and if we go to the daily time frame, can especially see them take place on the daily. Okay, so let's go back to the H4 because that's where I took this trade right here. So in this area right here, we have 2 points of interest. Okay, we have this point of interest right here, which is just a refined order block. I'm not going to go over in this video how I refine my order blocks, but if that's something that you guys want to see, feel free to drop it in the comments below, and I'll show you exactly how I teach my mentorship students to refine their order blocks and things like that. Okay, but basically, based on the H4 time frame, we have 2 points of interest. We have this institutional order block right here, and then we have this institutional order block right here on the H1 time frame. Especially, you can see it. Let's widen that just a little bit. All right, right here within this area. Okay. Now, why are these my points of interest? Let's go to the H2 time frame actually. So on the H2 time frame, we can definitely see how once price created, where's my brush? Here we go. Once price created this push to the downside, okay, we see that it not only broke below this level, this swing low right here, but it also broke below this swing low. Okay, swing lows are something that I really pay attention to, swing lows and swing highs, when I am trading liquidity within the market. Now, it's something that you don't have to pay attention to if you don't want to. I teach my students 2 different ways of following liquidity and trading institutional order blocks and things like that. So, if you're interested in that, let me know, and then I can definitely drop a video on how I like the confluences that I pay attention to, why, and things like that. So in this case, once we see we have 2 liquidity void pushes to the downside, okay, we have 1 liquidity void right here. Then on the lower time frame, we have an order block, and then we have another liquidity void push that broke structure all the way over here. So once I saw that, then I had to label this area as a POI. All right, POI just simply stands for a point of interest. It's just something that I pay attention to while I am analyzing the markets and things like that. All right, so I'll always like put a rectangular box similar to what I did right here, just so, and normally I'll set alerts. On this account, I've already cleared all my alerts, getting ready for this new trading week coming up, but I'll always set my alerts and things like that, 10 pips, 20 pips, 25 pips away, depending on the pair, just to be notified once price makes its way up within the region. All right, I'm going to go ahead and set this trade alert right here, though, because I am anticipating price to push to the upside possibly and go ahead and get us into this trade right here. All right, so with this right here, all I did was wait on price to come back to this point of interest. Now, why is this a point of interest? So if we go to the H1 time frame, we can definitely see how this right here is our last up candle before the down move. Okay, before the liquidity void takes place. This right here is our last bullish candle before we then see bearish, 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 push all the way to the downside. So what I did within this area is I simply just highlighted this order block and I took my fib tool out in order to use my 50%. Okay, so I don't always use 50% of the order block, but in this case I did because it's a GBP pair and I did not want to risk 13.9 pips, which is right here. All right, so I really don't like to risk too much when I'm trading liquidity. The main reason being is because you don't have to. So if you don't have to risk a lot, then why do it? Okay, so in this case right here, I decided to use, let's put that back. I decided to use 50% of this order block, Okay, and we see that price knocked us in to the T. I actually almost missed this trade by point 0.2 pips. All right, so if my spread would have been increased by 0.2 pips, I would have actually missed this trade. Now, if you want low spread and you want, you know, low spread, low commissions, low deposits, things like that, high leverage, then feel free to look inside of the description and use my code for KOT Forex. That's the broker that I use for my personal account. Feel free to use KOT Forex. And because of the amount of members that we have using KOT Forex, I can actually get you guys a discount on commissions and things like that. So feel free to take advantage of that. All right, check the link in the description below. So in this case right here, all I did was set a 50% sell limit, okay, at this order block, and I waited on price to trade right back up to this area. Once price traded to this area, as you guys can see, if we go to the M5 time frame, I don't know if we can go to the M1. This was another trade that we took last week as well. It was just a very, very straightforward move. We actually didn't make it up here to our order block, so we decided to use structural liquidity down here within this area, which is something that I also teach my students. Now, on this trade right here, it was only a 3.89% gain, but hey, we only raised 15.8 pips for 61.4 pips. Not bad at all if you ask me. So I trade structural liquidity as well as institutional order blocks and things like that. I teach both of those styles to my mentorship students. They all have access to my webinars. All right, so I drop educational videos every single week, trade breakdowns, Monday night webinars, live trading sessions, things like that. So I always release these videos. It's basically like very, very similar to a YouTube channel, except, you know, this is where I drop the bulk of my knowledge. So there are over 175 educational videos, all right, within my mentorship program. So you not only get educational videos, but you get access to my courses. You get to sign up for one-on-one sessions with me, lesson plans, strategy guides, which, you know, I don't really use strategy guides because I don't use indicators or anything like that, but I do have a large group of students who do like to use indicators, which is completely fine. And so I've uploaded strategy guides for you guys. If you do want to use indicators, things like that, you can feel free to check these out. Ichimoku, you know, that I use that for so long on GBP, JPY, and other JPY pairs. Reversal trading and MT trend trader are both strategies that I've come up with that are extremely profitable, as well as intrabands is a strategy that I came up with as well. All right, so feel free to check out the lesson plans, things like the strategy guides, excuse me. But what's most important in my eyes is going to be the webinars. All right, the webinars, you know, they're all around, you know, 30 to 45 minutes, if not an hour and 30 minutes long. Sometimes I am long-winded when it comes to these videos. But I break down all of my knowledge within these videos as well as the courses. All right, so I have 3 different courses that you guys can also check out. Feel free to click the link in the description and then just check out everything. All right, so in this case, we can see price made its way back up here, hit it to the T, and then fell to the downside. All right, this was not a bad trade at all. This is very similar to a typical trade that we take within my mentorship program. This is pretty similar to the trades that we go over on the Monday night webinars, things like that, every single Monday. All right, and then we can see how price just started to create downtrend structure the entire time we were in this trade. So within this trade, we didn't have any crazy spikes to the upside. Structure was maintained the entire time. We did see this spike above right here, but our stop loss by this time was at this structure right here. Once we broke below this structure right here, then we move our stops to right here, and we just keep going all the way down until we hit our take profit, things like that. All right, this was a very, very straightforward trade. If you guys do have any questions, feel free to ask me in the comments below, and I'll get back to you guys as soon as possible. Okay, we can actually go over another trade that we took right here. I believe I took my entry on the M5 time frame. So I was actually on a live trading session, on a live New York trading session with my students around this area right here, July 1st. And we were waiting for price to come up here, all right, to this order block. go to the H1 really quickly. Let me break down this trade for you guys. Okay, that's why it was so large. So I was waiting on price to come into this area right here, okay? But I was waiting on 50%. Okay, so I was waiting to sell price right here within this area, and we can see that it missed by just a little bit, but that is also why, all right, so we were looking for something like this. It missed by a couple of pips. Here, let me change this style really quickly. There we go. All right, let's go back to the M5 time frame. Okay, cool. So right here within this area, we can see that price missed our original entry by around 3 pips, okay, during our New York live trading session, and then price rolled over to the downside. All right, once we zoomed into the M5 time frame, and we started to see a transition phase take place. Those of you who don't know what a transition phase is, feel free to go check out my courses, and the price action course right here is going to be where I teach a lot about how I see the market as it relates to price action and things like that. So the transition phase is what I also teach within that course. And we can see that once we broke below this structure right here, price traded right back into it. Our sell was right here, all right, based on the liquidity sitting right below this area. Once we collected, we wanted to see price respect this area right here. Okay, so this was my entry. Let me go to the M1. I'm trying to figure out why we took it exactly right there. It's a couple days later. Let's see. Okay, I see why. So we were waiting on price to trade back into this area right here. Okay, so I was expecting price to trade back into this level of resistance and then just fall to the downside. Okay, we did have a little bit of drawdown on this trade actually, but no harm, no foul. It happens sometimes. So around 9 pips of drawdown, but our stop loss was around 15 pips. All right, and then we just pushed to the downside. All right, so we collected around 61 pips on this trade right here. Like I said, around 3.86% gain. Now we were looking originally for around a 6% gain, but hey, no harm, no foul. And then from there, we would have left a runner down here within this area by looking left for around an 8% gain, but it happens. All right, it happens sometimes. Sometimes you just don't get, knocked into your trades, and that's completely fine. All right, let's put that right there. Okay, but what's going to be most important is that you have a rule-based system. Okay, both of these trades were taken from a rule-based system, especially this trade right here. Now, the lower time frame trade, because it was a scalp during New York session, we kind of had to dissect the market a little bit. But this trade right here especially was taken based on simple rules that I teach to all of my students. All right, very, very simple rules. This trade you can expect week in and week out. And I always tell people, you only need one of these trades a week. That's all you need. This is a 30.7% trade. 1 week. Right? So if you have $1,000 within your account, this was a $300 trade right here for you. Okay? If you take one of these trades week in and week out, you're going to be very, very successful within the foreign exchange market. It's around 120% a month. All right? You're going to be very successful. Okay? So don't rush. Allow these trades to unfold and then just take advantage of them. With that being said, if you guys have any questions, feel free to drop them within the comment section below. Be sure to subscribe and hit that bell notification icon, to be notified when I upload a new video. If you are a beginner and you do want a rule-based system that is very straightforward, feel free to check out my Forex Fast Track course. It's in the description as well. It's basically what I use to first become profitable within the foreign exchange market. It was my first solid rule-based system that I created. It took me like maybe 4 months, 5 months. Let me see, 1, 2, 3, 4. Yeah, like 4.5 months, 4.5 to 5 months to create that course, or to create that strategy for myself. And I just put it in a course, format for you guys to take advantage of very, very easily. All right. We're also doing a $100 crypto giveaway. If you want to be a part of this, feel free to follow me on Instagram at TrillionaireMac, as well as comment how long you've been trading and what type of content do you want to see from me. What type of content do you want me to upload? And then just fill out the crypto giveaway Google form below so my people can, select the winner and then go through it and make sure that everything is everything. All right. With that being said, thank you guys for watching this video. If you have any questions, like I said, feel free to drop it in the comment section below and I'll answer you guys as soon as possible, or feel free to DM me on Instagram at TrillionaireMac and I'll get back to you as soon as possible. With that being said, peace out.